everybody, it's Omar. It is May 16th, 7:23 p.m. in the evening, and I wanted to make a video building my watch list for tomorrow. Just clarify a couple of things. This morning, usually every morning before I leave to work, I'll like post a chart or something. It may be something related to my watch list, it may be something not. Now, SYMC, I had posted this on Twitter this morning because I saw it was like downgraded, and the reason why this stock had been running back up from the initial collapse because people were saying, oh, they overestimated the news, it wasn't as bad as they said it was going to be. So I saw some news that it was supposedly going to be downgraded, so I initially thought that the stock was going to like gap and crap, and that's really not what happened. It actually, went higher today. So I'll just do the 1 day 1 minute just so you can see. So, I post a chart on Twitter with my support and resistance lines already set, and the market opened, and sure enough it spiked, and it couldn't get to this 22.19 level. As you can see, this was a previous support level. It was acting like as resistance, and you could have took a short there, and I had my underlying support here at the 21.89 level mapped. Now, I just wanna clarify, and you see right here, I just wanna clarify something. Like, if I'm biased towards one way, or I post something on Twitter where I'm thinking of doing, that doesn't necessarily mean that's what I'm gonna ultimately do. So, for example, unfortunately, I wasn't able to place a trade today. You guys that follow me know, I have a full-time job, and it's just demanding, and sometimes I can trade, and sometimes I can't. Sometimes I'll be active, and sometimes I won't, but if I would have saw something like this where the stock, I probably might have taken a quick short on this really quick, and because I would have seen it gap and then pull and then double top, and I absolutely would have took a short, risking that 22.19. Now, if I see the stock tank and I see it's reversing, because there's a lot of consolidation here, I'll cover and I'll switch my position. I'll go long. That's the beauty of this strategy, is that you play the momentum based off the support and resistance. You could be biased towards one way, but that doesn't necessarily mean ultimately that's how you're going to trade. There's people who follow me on Twitter who understand this to a T, and they just ride the momentum based off support and resistance. They're not you have an idea what you think the stock is going to do, but ultimately you just play off based off support and resistance. And I thought today would be a downward trend, but today the stock wound up being on an upward trend, and it's had 3 green days. I thought today may potentially be a red day based on this news that I saw, but the news didn't do anything. And really, I don't really pay much attention to the news most times. I just really play the technical chart. So a stock like this, had I seen something like this. So for example, if I see, let's say, the stock breaking and it's pulling back and it's finding its support here, and I see a momentum shift, then I'm gonna go long, risking off this, and I'm gonna ride the trend. And usually what I do is like, I'll just, once I'm in a stock and I see it riding a trend, a lot of times just for guidance purposes, I'll just put a trend line here and just ride the trend like that, and I'll just ride the trend line. And not use EMAs. Like, I used to use EMAs. There's nothing wrong with using EMAs. Some people use the 9 and the 20 and the 13, and I used to do all that. I just felt like all those things were impacting my ability to focus on the chart. And when I took all those things away and just focused on the chart, my slump ended. That was it. My slump was over, and I've just been killing it ever since. So that is what I wanted to talk about in terms of SYMC and what I do today. Now, I built my watch list for tomorrow. I got about 9 or 10 stocks on here. Now, again, I'm not going to play all 10 stocks. These are just stocks that I put on my list. Now, what you should do is you should create alerts if you have Thinkorswim, because Thinkorswim will alert you when it triggers a key level of support and resistance. Now, somebody asked me, like, do I have videos on support and resistance? I don't understand that, because all my videos are based off support and resistance. And basically, support and resistance is this: the stock gaps up here, this is where it gapped up, right? So this is a clear level of resistance here, pulls back, right? So there's a pivot point here because this is where it retraced, and then it had a move to the upside, right? So this would be a support level. Oops, sorry, let me put my let me put that my price alert. Yeah, right. So here's where it pulls back and holds, right? And then we have a move. So this is a clear level of support. Actually, let me move that here. It's actually here because this is where the trend changed. So this is the clear support level. This is where it gapped up, right? And this is where the pivot changed, right? So this would have been an area of resistance. Then it gapped down, found support. So this is how you play support and resistance. You know, and then this technically could be a support level, you know, and then right here, this was another area of support below it. All right, and this is kind of how you build your support and resistance levels. Then depending on the volume, you know, you change the time frame. So if a stock had a ton of volume, you can use a 1 minute time frame to figure out your support and resistance. If the stock doesn't have that much volume, you can use, you know, 5 minute or even the 15 minute. 15 minutes will give you really clear levels of support and resistance a lot of times, you know. So for tomorrow, right, this is a stock that's been on an upward trend, right? It's been gapping from 191 to 334, and this is the 1 year time frame. Obviously, if you don't see, you know, you may want to look at a further time frame to see, okay, all right, let's see how, you know, further back. Now this stock was at $23 at one point, and if we're looking, this is the next consolidation level, 353. All right, the stock is at 319 right now, so 353 would be an area of concern. So if it broke tomorrow's high day, so tomorrow if it breaks 334 and holds, you can take it long, but you know that overhead, so resistance consolidation area is at 353, so that could potentially be your exit if it doesn't break through 353. Well, that's an area where you can go short. Now tomorrow, right now, it's at 319, right? But maybe it attempts to pull back. So let's say tomorrow it pulls back and it holds, it gets back down to this 311 level. If it holds 311, then you buy the dip, risking 311. You know, that's how we trade. You know, that's how I trade. It's very, very simple strategy. Now let's say it tanks. You know, let's say tomorrow it just completely tanks it because, you know, it's had you know, how many green days now? 1, 2, 3, 4, 5, 6, 7. 7 green days, right? And each day it's getting more and more volume. So, you know, it's going to need more than 6 million shares to keep going tomorrow. Now, let's say people say, you know, I'm going to start taking profit because I don't know anything about the company. And at the market open, this thing, let's say maybe it spikes and right in here, because you see this is a huge consolidation area right here, level. Let's say it spikes and gets rejected in this 325 level, and I'm using this candle right here, 325, and then it just starts tanking. And let's say it breaks below 318. Let's say it breaks below 311. Then just hold it, and you would think your potential exit may be this $3 mark or the 292 mark, where there was a clear, you know, top and pullback before it broke and kept going. All right, or let's say that there's no spike. Let's say it just tanks at the open and it breaks below 311. All right, you can take it short, risking 311, you know, short in the key breakdown. Sometimes they reverse right away, so you got to be careful, but you know, that's kind of how you trade it, and that's how you kind of, you know, figure it out. So if tomorrow this thing, let's say it tanks and it gets back to 292, that could be a potential level where you say, okay, I'm gonna buy the stock now here, because if shorts are riding it down, then, you know, here's a potential area where this was the previous day's high. It could find good support here, and then people may take their profit and it may continue back upward. And that's how you trade, guys. That's what, you know, these guys, you know, don't teach you. You know, if you're like a warrior trading student, he don't talk about any of this shit. He's just teaching you, you know, look for momentum right before the open, and he buys the breakout. And what he does is he gets in, he alerts everybody. Everybody drives the price of the stock up. He sells his position, and he looks like a genius, and you hold the bag. Same thing with deck mark trades. It does the same stupid shit, you know. So, you know, that's what a lot of these guys do, you know. Not all of them, you know. Some of them are probably legitimate, you know. Not every, and not some of these, and some of these guys, their rooms aren't big enough. But if guys are telling you to, you know, buy stocks with volume like over 200,000 shares or something like that, traded for the day, 100,000 shares, he's definitely pumping the stock so that he can sell it to you. And you know, they'll tell you, oh, I don't trade, I trade with a small account. Who knows? They may have a fucking huge account they don't tell you about, where they're making shitloads of money, and you have no idea. Yo, this They're grimy. These guys are grimy. Trust me. Most of them are just trying to get rich off you. And you know, and if these guys are so great and such good teachers, why are most of their students going broke? You know, I guarantee that just every chat room, I don't care whose chat room you're talking about, the majority of the people in those chat rooms are not making money. They're losing and they're failing. One, because they don't have the discipline to trade, because trading is really hard. And two, because the teachers aren't really teaching them. You know, they're not really teaching them technical analysis. They're selling them some stupid scanner or some stupid DVD. All this nonsense, man. Look, the best way to trade is the way that I'm teaching you guys. You build a watch list. You map your support and resistance levels. You have a plan. You look at the daily to say, okay, is this still an upward trend or a downward trend? Because I want to ride that momentum. You want to trade the trend more than just scalp, you know. But sometimes, you know, you just scalp. You know, sometimes you just gonna have to do that. You're gonna play the chart, whatever it's gonna give you, because nobody really knows what a stock is gonna do. And that's kind of how you trade. So this is very simple. If it breaks 334 and it holds, so meaning it's going to break out, it's going to pull back, either it's going to form a higher low, or it's going to literally pull back and test 334. Maybe it breaks below it and then comes back up and sideways. You might see a little sideways and then it just off. Sometimes you got to watch it to see, you know, and then that's your confirmation. You see the volume come in, you see the bids, you see the ask of foot fading, you see the bid, the buyer stacking up, and then you take that ride. That's what you do. Or if not, you buy one of the, you dip by one of these areas below, or you short. Okay, that's how it is. Now EBIO. EBIO is a perfect example. Let's pull up the 30-day chart so I can show you what I'm talking about. Like today had a big move, right? But if you notice, over the last 5 days, right, EBIO kind of like found its support like right around this level here, right? This is like a big area of consolidation. If you notice, it hit a low here of like 256, and then kind of got all the way up to back to 290, and then kind of faded, and it's just been fading. But over the last 5 days, this is the highest point, $3 actually. What is this? 302. Yeah. So look what happens here, right? The stock breaks out today. Okay. And gaps up, pulls back, gaps up, pulls back, and then look at that 302, which was the high over the last 5 days. Look, it pulls back, holds that 302 level, and then off to the races. So EBIO, because it had such a strong day, we map our support and resistance lines. And tomorrow, what I'm looking to do, so I want to see if it breaks and holds 344. I'll take it long, risking 344 as a daily breakout, because I'm good with buying daily, weekly, monthly, yearly breakouts. 350 is really the goal, though. You got to be careful. So 350 is the yearly high. So really, the real test would be 350. If it got to 350 and held it, I take it long, risking 350. Now, if it got to 350 and couldn't hold it, like you see like a wick like this or something like that happen at 350, then I'm going to short it, risking 350. Very, very simple. Now, let's say it tests and then it just fades. Now, to me, there's a lot of consolidation here at this 325 level. So if it held 325, I'd buy the dip there, risking 325. Or if it broke below it and got back down to this previous pivot point of 314 and held it, I may buy a dip there, risking 314. Or I may short it. It really depends. For me, I like to short as close to the highest point as possible, or resistance as possible. So like if it couldn't hold 325 at the open, I may short it, risking here, if I was going to short it, because it's a clear level, it's close to the high. You're getting it at a good price on the short. If you're shorting it down here, it's already faded a lot, so you got to be careful, because people may cover, and maybe this is still on a bullish trend, and may rip on you. So you just got to be careful where you decide you want to short. You got to see, you got to see what the stock is doing. You got to see how the Dow is, how the SPY is, all that stuff. All right. So that's what I do. So I map my support and resistance levels below for potential dip buys. All right. Or if I'm shorting, to potentially cover into, because I see, okay, here's a trend reversal taking place. All right. That's all I'm doing, and these are the levels that I mapped. Okay. See, look. Stock spikes up, gets here, pulls back, right here at that 285, held, ripped. Stock spikes up, gaps up here to 311, pulls back, gets a low of 297, rips. Stock gaps up, gets to a high here of 319, pulls back to 310 and then goes up again, pulls back, but it doesn't get back to this level. So I still, in theory, yeah, this could be a resistance point, this could be a resistance point, but this is where I really see it, sort of like it didn't get back to slow. So I see this as the pivot point where it removed. Then it got up here, and in theory I should put a level here because this is kind of like close to the high. This is important. And then it kind of gaps down, gaps up. So but I like this level here because there's a lot of consolidation here. You see right here, 319, 314, 314. So, and then it kind of just moves. So these are levels because of the consolidation and the clear points that I'm looking to potentially buy a dip or short into it. Like let's say the stock, fades and gets to 285. I'm just making this up, and then it rips all the way back up to, let's say, 325, but it can't hold 325. Then I would maybe potentially short it, risking 325, because I'm thinking, all right, maybe it's gonna just fade off now or whatever. And that's how I do it, guys. That's pretty much the strategy. FENG, it's a stock, and these are on my watch list because they pretty much held their highs. So they're easy buys if they break out and keep going. Why not put it on your watch list? They're simple plays because if they buy that, you just buy the breakout if they hold the breakout level. I mean, EBIO 350 is really the breakout level. You gotta be careful, but you know what I'm trying to say. So 344, if it held it, you break it. It's a daily breakout, so you take it long. That's why it's on the watch list. It's a simple play for me. FENG has been two big strong days. It had it's getting more volume, and the last time it had this move, it started on this upward trend. I remember this thing was like, it went from like 2 to 8. So right now it pulled back from 8 and it had this consolidation at 380 level, and now it's starting up again. Now I don't know if it's gonna get back to 8, but we'll see. And I'm just playing support and resistance. So maybe tomorrow it fades. So maybe tomorrow it spikes and it can't break that previous high, 582, 572. So you know what? I would go short, risking 572 and looking for a fade. First see how it's gonna react to 550. Then to 517, then 507, and and maybe it turns. Like, just because I didn't map a line here doesn't mean that, like, for example, 540, it could bounce there. So that's why you gotta watch the chart, because in theory, sometimes I just hate having all the lines on my screen, to be quite honest with you. So sometimes I just don't put them. But this would be also a clear level to pay attention to. But if it broke 572. I go long, risking 572. Now, what you want to see is, okay, where is their overhead resistance? So if I can't see it here, I'll go like, let's say, let's get 180 days. So the next level above it, to me, would be, I don't know why I have 586 here. It's probably because on a slower time frame, 586 oh, that's why. Because right here, 586. So 586 matters. But if it broke 586, then this could potentially test 6 and maybe keep going. So, just watch how it reacts. Now, what I would love to see, to me, the simple play would be that it spikes, gets rejected here, and just fades, and you get a piece of that. Like, look, that's what happened here. It went from 572 to 517. That's what, 60 cents. That's range, guys. 60 cents is pretty good. Now, if you have a sizable account or you have leverage, and let's say you take 3,000 shares, right, and you get 60 cents, that's $1,800. That's what I'm talking about. So when you watch these guys on Twitter, don't let them distract you from the fact that they're making, like, some of these guys, you see them post, they make $10,000, $20,000, $50,000. Remember, they're not playing with 500 shares. They're playing with 10,000 shares, 15,000 shares, 20,000 shares. That they're taking a lot of size. They're taking a lot of size, and that's why they're making the money that they're making. All right, so more risk, more reward, but more risk, more loss too. So that's something you just gonna have to figure out as a trader what you want to do. Now tomorrow, in terms of this stock, that if it pulled back and held 518, that is definitely a key level to potentially buy the dip if it's still going to be on an upward trend, or this 507 level. Very important to pay attention to those levels tomorrow if you're watching this stock. Next up, Billy, we were shorting this, but it finally broke out, and Billy is on a tear. I mean, this is why I don't pay attention to RSI. According to RSI, this has been in the 90s forever. That's why RSI is bullshit, man. Don't listen to that bullshit. But you know, this is a clear stock. It's very simple to trade. All right, it has clear support and resistance levels to play off of. If it broke 1435 and held, go long. It's a brand new stock, so just ride the wave. All right. Now, if it got up here and rejected it, go short, risking it. Now, if it pulls back, let's say the market open, it breaks below 1377, and it gets to this either 13. Why did I put 1343? Oh, probably because on the 5-minute time frame, there's probably some. Let me see. Oops. Yeah, that's why. Because yeah, on the 5-minute time frame here, it's actually 1344, where it actually bounces. But you know, if it held 1344, you can buy the dip risking 1344. Or if it pulled back, and this is a big level, 1311, there's a lot of consolidation here. So this may be like the good area where it may, if it's gonna bounce, would be probably at this 1311 level. But you know, you got some support here at 1289 because this is a previous day's high. Very important line to always map. And you know, just play off those levels to potential shorts or dip buys. That's it, guys. I like shorting. That's what I prefer to do. Especially, I make a lot of money shorting spikes into resistance. And that's how you see a lot of the guys you follow on Twitter. They do the same thing. They'll short spikes into resistance, or they'll short like into, like, for example, you know, you guys see I do this all the time where, like, I think it's BOXL, I think it was, right? Let's see. So for example, this is the type of play that I love, where, you know, it was on my watch list today. You know, so you see, let me pull up the 5-minute chart. All right, so let's put. So you know, it's this stock that was up to $12, found support at 902. You know, spike, gapped up, and then look, right. So it's starting to fade a little bit, right. It found support here at 9, and then you get that crazy fast spike, and then look what happened. It couldn't hold 1060, and then you just short into the fade. And that 1060, you go short, and you cover here 928. Now you get 1,000 shares. Like this in this 15-minute candle, it traded 366,000 shares. Let me use a 5-minute time frame because it's a lot easier to see on a 5-minute. Or even, you know, and obviously I'm using the 1 minute, but you see it can't hold. Look at that wick, and you just catch that down, and you get like, and you go in like 4,000 or 5,000 shares, and you make $5 grand. I mean, this is the easy pattern to short, and I love it. You know, these are what I love to do. And you know, it was on my watch list today. Of course I couldn't trade it, but I would have been watching the stock simply because of the pattern. You know, and that's what I love to do, and that's how I make a lot of money. And it's simple. And you can do this on the higher price stocks. It's even easier to do, and you take less shares. And instead of getting 1 point, you get 4 points. So that's what I was trying to. I was talking to a mad ass trader, and I was telling him, like, he wasn't understanding when I was, you know, he takes so much size, and I was trying to explain to him that if he took 1,000 shares and traded stocks in like the $50, $100 range, he would make so much more money because you get so many points when a stock, and the reversals are a lot easier to predict. But that's what I was talking about. So that's that. So Billy is on the watch list tomorrow, and we'll see what happens. Now, next up here, I've been telling everybody to pretty much stay away from this, but I know that there are people who like to trade this kind of stocks. So me personally, you know, I would be very scared to trade this, just because of the crazy volatility. And I would only short this. I would short like a pop and a rejection. Like, for example, this closed weak. So, you know, so in theory, you would think because it's been on this crazy run that it should give back, right? But remember, 2 days ago it closed weak as well, and look, the next day it squeezed shorts all the way to 19 bucks. So we don't know what's gonna happen tomorrow. You know, we may squeeze shorts tomorrow some more. But me personally, if I were to take a trade on this, right, I would only trade this if I saw this spike and get rejected into this 1918 level. Why I say 1918? Because there's a lot of consolidation here at this 1918 level. See, touches it several times. That's the only play for me. That's the only trade I would take a risk off of. Otherwise, now you could go long on it, but you know, at risking that level, but it's just too crazy to me. See, look at it, it's just too volatile. You know, people are trading this, and I get it, but it's just very, very volatile. Now, if tomorrow, if it fades, right, we have our support and resistance levels mapped. So the other key levels that I would be looking at here to potentially trade this stock would be this 1704 level. And I clicked 1704 because it said 1706 here. Oh, it's 1706. I wonder if I did a 1 day, 1 minute time frame when I did this. Let's see. No, it was 1706. I should have just put 1706. Yeah, that was a clear pivot point. So let me put up 5 day, 5 minute. Yeah, so 1706 was a clear pivot point, and then, you know, kind of ripped. So that's why this is a key level to me. And you see, because, you know, this thing just bounces up and down crazy, you know. So, you know, 1706 would be a potential level that I would dip by the stock. Also 1790, there's a lot of consolidation here at 1790, $16 and 1503. Those are the levels that I would potentially look. Now I would, you know, if I'm trading this, I'm only looking to short this, risking one of these levels. I don't know. The only way I would dip by it, like I have to really see the momentum shifting on level 2. I would be in and out real fast. I don't know. It's just so volatile. I'd rather play something that's a lot less stressed. This is a very stressful stock to trade. All right, next up, OMER. Now OMER, these are the stocks that I love to trade because, right, this stock went from $25 to $19 today. The chances of it getting back to $25 tomorrow are slim. Maybe it begins an upward trend down that road, but if I can take a piece of it short, I would. That's what I prefer. But don't get me wrong, like these are the key levels, right, where, you know, you've seen it bounce, and, you know, find support and just continue down, right? So now tomorrow, let's say tomorrow the stock gaps up for whatever reason and it breaks 2013. I may go long risking 2013, you know, and that's a key level to me because of this right here. You see, got some consolidation here, and then it just kind of, you know, that's where it gapped up and then it faded, and, you know, obviously you have other levels here, but that's a key level to me. 1964. Let's say it gapped down and held 1964. I'd buy the dip, and maybe I buy the dip risking that if it held it. Okay, I don't know. But for me, you know, I would like to see it like gap up and then get rejected into one of these levels, and then I go short. We short it, thinking that hopefully it's still on a downward trend. But let's say it broke 2080 and it held it, and I see volume coming in. I go long, risking 2080. It's nothing wrong with that. Now you know, and then I have to look at these candles because I didn't map it, but 2110 could potentially be a rejection level because you see there's clear support there. So you have to be careful of that, you know, and that's how I would look at it, you know, and I would go long, all right. Otherwise, I would short. What I prefer to do with these stocks is watch the spike, hope for it, you know, to get to one of my levels, get rejected, or either break above it, can't hold it, go below it, and then I go short. That's just, to me, very, very safe. And that's what I'm looking tomorrow. These are the levels that I'm looking to potentially risk off to go short, hoping that it's still, when I look on the daily, that it's gonna be on the beginning of a downward trend. Because last time when it, you know, trended, it had like several days where it went red, and, you know, a couple of times it had big red days. You see, and then it followed up with multiple big red days. So my guess tomorrow is that we'll continue to see more fade. I mean, the 50 days. Remember, every stock to me, I always say the simple 50 moving average, every stock is a magnet that has to come back to that line at some point. You notice here, like when it broke at 14, it got to 27, but it found its way back to it at $20. All right, so, you know, it'll find its way back there at some point. No stock ever stays away from it forever. All right, so that's something to keep in mind. All right, next up is IQ. IQ is another stock that finished red. You know, it's had 2 red days. You know, it's you know, been on a nice move up. This could be the beginning of more, you know, more of it giving back some more. We'll see. I mean, there's some clear support here at $20, so we'll see what happens tomorrow. But for me, when I'm looking at the stock, right, I want to say, okay, how is it going to react? Let's say tomorrow the market opens and it starts tanking. And if it finds support at 20, I'll buy the dip risking 20. Or if it keeps tanking some more, I could buy the dip risking 1950. But me personally, like if it can't hold this level, I'll go short risking 2060. You know, looking for a price target of $20 or even 1950 if it can't hold 1950. Now, if it spikes If it holds 2060, then I'll go long, risking 2060. But remember, even though I didn't map it, you can't, you got to look for yourself, because right here there's some overhead resistance. It can get rejected right here or even here, because it's a consolidation level. So it's just something to think about. All right, but I would go long. All right, I have no problem with going long, but I prefer to see it get to an area like, for example, let's say it spiked and it got to this $21 level and couldn't hold it. I would short it, risking 2103, because there's a clear consolidation level. All right, and these are the clear consolidation levels above. So we'll see what happens. I would like to see a spike and short into that. But like SYNC, you saw that it did gap and crap and then just ripped. So I would wait for it to pull back in one of my key areas. But if I saw a good opportunity to buy the dip, I'm buying the dip. There's nothing wrong with that, guys. There's absolutely nothing wrong with that. Now, if this thing tanks tomorrow, I mean, it gets all the way back down, breaks 1950. I mean, this could potentially get to there's a key level, 1874, even 1830. And you could potentially buy a dip down there. Shorts cover and you ride it up. That's how it is. Some people just love doing that, buying dips. Others like to buy breakouts. Others like to short, like me. So it just depends. UAA and UA, they run in unison. They just, it's been on this tear, a lot of volume. I just put it on the watch list to see, hey, if it broke 2066 and held it, I may go long, risking 2066. And I really should have looked at UA instead of UAA. But we gotta be careful, right? Because right here at this 2103 level, actually, put it, there is some there's resistance there. So I would, if this broke 2066 and held it, I would go ride it and potentially exit at $21. But let's see what now. If this tanks, if it tests this and can't hold it, go short, risking 2066, and then 2036 is your potential price target. 36 cents. Now it just depends. So if you have sizable account, take a few thousand shares, that can be a nice win for you. Just really matter. It just really depends. And these are all areas below that I could potentially buy a dip. All right, if it cracked, if it tanked. This is another key area. You gotta map this high here. You always gotta map those highs. That's important. And here's another level. And that's how I trade, guys. That's how I trade. 2 more stocks before I end this video. Hula has been 4 days, a new stock. It's just been running. Now, you gotta expect that people are gonna take profit. I know nothing about this company. What I would like to see is, and here it goes, it's already starting to pull back. $23 is the low here. So let's put 23. And I don't think I'm gonna be able to trade tomorrow either, unfortunately. I don't know, we'll see. But we'll see. Now if it breaks 23.50 and holds, take it long, risking 23.50. If it breaks below 23 tomorrow, you can short it, risking 23. All right, if there's shares available. I don't know anything about the stock. And then I would look for potential dip by one of these levels below. All right, 2188, 2141, 2110, 2075, 2050. And all I did was, just map those pivot points. That's all I'm really basing this off. All right, and that's what and then maybe it continues running. So it's just something to think about. All right, this is something to think about. Okay, and last but not least, because this video has been going forever, is DUK. Now these are the stocks that lately I've been liking to trade more. These higher price stocks. I mean, you just get so many points on them, and I can just take 1,000 shares, and they're so easy to, when you get the reversal, and you can, and honestly, a lot of times on these trades, I'll make like $4,000, $5,000, $6,000. I get like 4, 5, 6 points on 1,000 shares. It's like I don't even have to, and I don't. It's not, and my risk is so minimal. Like, so for example, let's say tomorrow this stock gaps up, like if it broke 76.10 and held, I mean, take it long. I mean, it's a clear level of support. It's already at 70. It's at 76. It says 76.03. It's over here now. But if it broke above it at the market open, ride that bad boy up. But me personally, because it's down so much. It was $79 5 days ago. I mean, it's just been on a downward trend. You notice that, gaps up, it'll spike, and then it gets rejected. Look, next day, right, this is a clear support right here, right around here. Look what happened. Next day, spikes, can't hold it, short it. Next day, here, look, support is acting as resistance every day afterwards. Spikes, can't get back to that level, gaps, you know, craps. Same thing. Next day, spikes. This is a clear level of support, which acts as resistance, spike, craps. It's been doing that every day. You know, shorts may begin to cover. People who buy puts may, you know, cover their calls or whatever that's called. And you know, this thing may start going up. Now, is it going to get back to $79 tomorrow? I doubt it. You know, so what I'm doing is looking to see a spike. I would love to see it get back to the 76.57 level, get rejected, and go short. So I would take, this is the kind of stock that I would take long at the open and then short, and then cover, you know, buy, then sell, and then short, and then take it back down and cover. So we'll see. You know, we'll see what goes on. But these stocks, they move in points, man. They give you, you know, and it's not as chaotic to trade as the higher price stocks. So we'll see. But maybe tomorrow it doesn't even get to 76.10. Maybe it just keeps tanking, you know, and it breaks below 75.50. Oh, but if it held 75.50, you could buy the dip. All right, so, you know, maybe that'll be the bottom tomorrow, and then they'll start trending upward. So we'll see. You know, that'll tell. So those are the stocks that I have on my watch list tomorrow. I also am working on a swing trade strategy. It's simple. It's gonna be based off support and resistance. You know, you don't you won't find, like, I'll find stocks on a scanner, but doesn't necessarily mean that they're ready to be traded, because you get into them as close to support or resistance as possible. And when I'm done with it, I'll post it, and then, you know, then you guys can kind of, you know, make it your own. I've been doing it for a while now. I've had some pretty good success, but it's not a sexy strategy. It's one of these, you know, slower paced strategies, but it's good for people who can't day trade, or who don't like care to day trade. I think swing trading to me is the best type of trading. Like, if I knew how to swing trade really good, I'd probably be more of a swing trader, to be quite honest with you. Because but you know, but this is what I'm into, so this is what I'm gonna stick with for now. And I'm also working on some other things that I think you're gonna love. You know, when I'm ready to announce things, I'll let you guys know. But I don't want to talk about anything until things are done. But I already started to set some things in motion, so I'll keep you guys posted. So, you know, so again, guys, look through the biggest percentage gainers, biggest percentage losers. Same thing on FinViz. Again, you know, you look for stocks that are up or down. Look at the daily. Look for stocks that have been beaten down, and stocks that holding their highs. And those are the stocks you should be looking on your watch list. All right, folks. So like, subscribe, and share. You know, like, subscribe, share, leave some comments on Twitter, on YouTube, watchotrade, and have a great evening.